Hello and welcome back to Global Value. In today's video, we're going to be performing a fundamental stock analysis of Intuitive Surgical Inc., ticker symbol ISRG. We're looking at Intuitive Surgical today because their stock price recently hit its 52-week low back in June. The business has a reputation for having strong fundamentals. At the time of recording this video, Intuitive Surgical is trading for $202 per share. Year to date in 2022, their stock price is down nearly 44%. Going back over the past year, their stock price is down 37%. Over 5 years, however, they're up 14% compounded annually. That's about the same over 10 years. And going back 17 and a half years prior to the global financial crisis, Intuitive Surgical has returned 25% compounded annually. So they have been a long-term compounder. In fact, from their lows during the financial crisis up until their recent high last year in November, the business was a 35-bagger. Even with this dramatic drop-off in their stock price, the business is still up 20 times since 2009. Intuitive Surgical recently hit its 52-week low. Currently, they're trading $14 above that low, which is down about half from their 52-week high. Even with this huge decline in their stock price, the business is still a large business. They have nearly a $72.5 billion market cap. For some more background about the business, Intuitive Surgical develops, produces, and markets a robotic system for assisting minimally invasive surgery. It also provides the instrumentation, disposable accessories, and warranty services for the system. The company has placed nearly 7,000 Da Vinci systems in hospitals worldwide, with more than 4,000 installations in the United States and a growing number in emerging markets. Intuitive Surgical was incorporated in 1995 and is headquartered in Sunnyvale, California. For today's fundamental analysis, we'll be performing a modified version of the 8-pillar analysis originally popularized by Everything Money, taking a look at 8 key financial metrics of the business to come to a holistic and beginning understanding of the business's fundamentals. So let's get right into our analysis. Starting off with pillar number 1, we want their average 5-year PE over the last 5 years to be below 22.5. Currently, they're trading for 45 times earnings. And over this time frame, they went all the way to a high of 99 times earnings and all the way to a low of 32 times earnings. So quite a range there. However, that is still significantly above the 22.5 we're looking for. And over this time frame, they've traded at an average multiple of 65 times earnings. So that is a big X to start off on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are captured by return on capital. Intuitive Surgical's return on capital has bounced around a little bit over this time frame. They dropped down to a low of nearly 11% return on capital in 2020. However, in all 5 years, they've been above that 9% metric we're looking for and averaged out their earning about a 16.5% return on capital. So while it has fluctuated a bit, that's going to be our first check on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. Intuitive Surgical has grown revenues from $3.1 billion in 2017 up to $5.7 billion in 2021. So that's another check on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. Net income's here in white next to their total revenues. Similar to their revenues, they've grown net income from $670 million in 2017 up to $1.7 billion in 2021. So they've been able to double their net incomes over this time frame, and that's a check on pillar number 4. So far, through 4 pillars, we're 3 for 4. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back stock and decreases the number of shares that are outstanding, they're increasing your ownership percentage of the business, which ultimately increases the percentage of the business's profits that you're entitled to without you having to spend any money. So if you own 1 of 10 shares outstanding and a business buys back a share, instead of owning 1/10 of those shares or 10% of that business, you're now owning 1/9 of that business or 11% of the shares outstanding. So while your share count hasn't increased, the overall denominator has decreased and your ownership percentage has gone up. Unfortunately, in Intuitive Surgical's case, we're seeing the opposite. They've increased their shares outstanding, which means that they've diluted existing shareholders over this time frame. They had just under 350 million shares outstanding in 2017, and that's increased to 366 million in 2021. So that is going to be an X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is this column here in green. Free cash flow is the lifeblood of any business, and a business's ability to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately how that business is going to be valued. Free cash flow can be used to buy back shares, pay dividends, pay down debt, make acquisitions, or reinvest back into the business. So in 2017, Intuitive Surgical produced $953 million of free cash flow, and they've grown free cash flows all the way up to more than $1.7 billion in 2021. So that is a check there. They've nearly doubled free cash flows over this time frame. Even though Intuitive Surgical has an installation base with their Da Vinci robot systems, relative to their cash from operations and their free cash flows, it doesn't look like they have to use that much in terms of capital expenditures to fuel their business. So that's a good sign here that although the business does have that installation base and that requires some CapEx, it's reasonable and manageable compared to their overall cash flows. The other thing we want to take away from looking at their free cash flow profile is how much free cash flow they produce in an average year. So over this time frame, Intuitive Surgical is producing about $1.2 billion of free cash flow in an average year. We'll use that number when we're evaluating how the business utilizes leverage and then how the business's current market cap compares to their ability to produce free cash flows. Next up, for pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. Pillar number 7 is going to be a check. After paying off all of their debt, Intuitive Surgical is left over with nearly $4 billion of cash as of the end of last year. The business has a large cash pile and has a very strong balance sheet. Finally, pillar number 8, the big pillar of them all, we want Intuitive Surgical's market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point as to what we should be paying for the business. Currently, Intuitive Surgical has a $72.5 billion market cap. When we subtract the net cash that they have on their balance sheet, we come out with their total enterprise value, which is actually $68.5 billion. So that's going to be a more realistic economic picture when evaluating the business. So if we multiply their average 5-year free cash flow of $1.2 billion times 5, that only brings us to $24 billion. So even compared to their enterprise value, that's off by more than $44 billion. That's going to be an X on pillar number 8. Keep in mind that 20 was just a starting point, and just because pillar number 8 is an X doesn't mean that you're going to discount this business entirely. Instead, this type of analysis is a beginning and holistic analysis. You want to look at all of these metrics in combination, and there's no one metric that's going to be an end-all be-all when evaluating a business. Then, just to note, Intuitive Surgical does not pay out dividends. That might be something that they potentially do later on into the future. So in summary, Intuitive Surgical checks the box on 5 out of 8 pillars. They're off on our valuation metrics, and they have slightly diluted shareholders over this time frame. However, the business has had strong and steady growth, growing revenues, net incomes, and free cash flows, while earning above average returns and having more leftover cash than they have debt combined. So overall, the fundamentals of the business look strong, but based on those valuation pillars, if you think those are reasonable, the business looks relatively expensive still. So keep in mind that this type of analysis, as mentioned, is a holistic starting point. It's not financial advice, and it's not a buy or sell recommendation of Intuitive Surgical. In order to be an actual investor and to be able to invest in a business and not be a speculator, you need to understand that business inside and out and be able to truly understand the essence of the business. The only way you're going to be able to do that is to learn more about the business. So I highly recommend that you check out the business's filings, you dive into their 10K and read through their annual report to get a better sense of the business as if you owned 100% of it. So with that said, that's it for today's fundamental stock analysis of Intuitive Surgical Inc., ticker symbol ISRG. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what company you want me to take a look at next time. Thanks for learning about Intuitive Surgical with me, and have a great day.